5 ways to reduce your inheritance tax. Most people in the UK, they don't pay any inheritance tax after their death. Only 4% of the people in the UK pay IST. That means only the wealthy people, they pay inheritance tax. Number 1, if you leave asset to married or civil partner, it is exempt. So, if you leave your asset to your husband or wife, there is no inheritance tax to pay. But the condition is very strict. It should be married partner or civil partner. Number 2, nil rate bond. You don't need to pay any IST for the first 325,000 worth of asset you leave to other people. If you leave to your main resident, it is boosted to 500k if you leave it to your offspring. So you can leave your unused 500k of IST allowance to your husband or wife. In that way, you leave everything to your wife, or your wife leave everything to your offspring. She has 500k allowance and you have your 500k allowance. So together, you and your husband will get total 1 million of IST allowance. So if you live in your main residence or after your death, if your wife live in your main residence, you will get a 500k of IST allowance and your wife will get a 500k of IST allowance. Together, you and your husband will get a 1 million of IST allowance. That means up to 1 million worth of estate, you don't need to pay any inheritance tax. But if your estate value is more than 2 million, the extra 175k inheritance allowance boost, you will not get it. Gift. If you gift away asset to someone and after that you live 7 years, you don't need to pay any inheritance tax. Number 4, regular gift out of income. Make gift from your spare income. Regular gift out of income is IST exempt if certain conditions are met. Number 5, save more into your pension. Pension pot are not subject to inheritance tax when you die. So you can, in your lifetime, you can save more money into your pension pot to reduce your inheritance tax. IST planning. For example, your estate is 2 million. You and your wife together, you will get an IST allowance of 1 million. The extra 1 million worth of estate, you need to pay inheritance tax, which is 40%. If you work out 40% of 1 million is gonna cost you 400k. This is payable after the second death. So what you can do to deal with the huge amount of tax burden? You can do a whole of life policy plan which will cover 400k, but it needs to put in a trust and your children will be the beneficiary. So it's better if you can set up a granted whole of life policy. Insurance company will pay 400k to your trust. If you need more information, please contact me. It's just a guidance. Your situation might be different, so it is recommendable to consult with a tax advisor on your estate planning. Thank you.